Thank you. Just maybe I should start by saying it makes a lot of sense for this session to come last in today's proceedings because, you know, the supply side, the finance aspect typically follows everything else, should. And I think the problem we have with infrastructure is not necessarily raising the money once the deal is bankable. It's to get to that stage of bankability. And there's a very common phrase that we hear in the industry that there's no bankable projects, whether you're a pension fund, a private equity fund, or any kind of specialized funder. Everybody wants something ready-made to come to the table that they can then assess and go into. And I think the single biggest problem we have is getting to that investment stage, that bankability stage. Somebody's got to do the work, and we know that market failure is not the only problem. We have an institutional problem as well. Many of the sponsors, especially when you're dealing with infrastructure, are invariably in the public space. The capacity of those sponsors is very limited. Those sponsors don't have to put up the money, but they have to put up the frameworks up front. The regulation has to be in place. All those things need to be in place. So I think the challenge you have when you get towards the end of a day like this is you come to the financing discussion and you realize that the answers are not here. But of course, when you're talking to DFIs as opposed to, say, pension funds or those who are purely in it for a commercial gain, I think that one can ask the question, what is the partnerships between donors and the public policy domain with DFIs to help DFIs perhaps do a little bit more of the dirty work or the upstream work to get that enabling to come through, to get that traction to come through. And I think one has to also give some credit because over the past 10 years there's been some very good progress in this regard. Several of the entities in this room on this panel have put up special purpose facilities to actually get involved in pushing infrastructure projects long before they're bankable. And it means sometimes you have to walk away if a pre-feasibility study or a feasibility study suggests that it's not feasible, or if it highlights key conditions that have to be in place before one continues, at least it becomes very clear. So even though I give credit, I think there's a lot more that needs to be done in that regard. When you look at the ticket size of infrastructure development, Brian Molefe was talking about the huge agenda we have to finally begin dealing with this backlog of investments in infrastructure. These investments come parceled up in projects, and every project has to be prepared, packaged, and so on. And who's going to do that if you have an institutional challenge like we have? And so I think where donors have a commitment or a passion to help in this area, I think they should do more with what they've been doing. I know the African Development Bank, with the Canadian support, has had a very good facility. I think it was $10–15 million. Tim, you can correct me. The DBSA with Propaco and Agence France de Développement, they had another 20 or so million. But when you hear the numbers that are required, you're talking about anywhere between 4 to 6% of the investment volume required per project. If we're told that the shortfall to be raised is on the order of 30 to 40 billion US dollars, and you apply that 4%, you know what kind of money you're looking at. That's the quantum that we need to get things moving. So maybe my colleagues from the big partners to the region can speak to this issue as to whether there is interest on that part to help pre-investment stage. So I think that would be my initial contribution.
Doing business in Africa, you can't afford to be without Africa Investor.